Hey everyone, let's talk about what's really going on in the markets right now. Whether Trump planned it or not, his tariff war talk and the wave of corporate job cuts are tanking investor confidence. The market's sliding, companies are pulling back, and recession alarms are flashing again. But here's the thing, that chaos might actually create an opportunity. The Fed just announced it's slowing QT. That's quantitative tightening, their way of pulling money out of the economy. Slowing QT is a dovish move, and it usually means they're getting ready to pivot, to either pause rate hikes or cut rates altogether. Why? Because a shaky market plus a potential recession, political and economic pressure on the Fed to step in, and Trump wants that too. A huge chunk of US debt matures later this year, and refinancing it at lower rates would save billions. If the Fed cuts, that makes it easier for the government to manage debt without making the deficit explode. So whether intentional or not, Trump's economic pressure is forcing the Fed's hand. And here's the silver lining in the storm. When the Fed pivots and liquidity improves, a bunch of asset classes tend to fly. TLT. Long-term bonds love falling rates. As yields drop, TLT usually goes up. Bitcoin, BTC thrives on lower rates and rising liquidity. The minute the Fed sounds dovish, crypto gets a jolt. Gold and silver, hard assets shine when real yields drop and the dollar weakens. Investors run to them as stores of value, especially with all the talk of money printing and debt. So yeah, things look bad now, and they might get worse. But this correction, triggered by trade war fears and rate pressure, could actually be setting up a powerful move in TLT, BTC, gold, and silver. Keep your eye on the Fed. When QT slows, QE could be next. And for savvy investors, that shift is where the opportunity begins.